When you start a business in Pennsylvania, your first step is registering under Title 15 of the state's consolidated statutes. Doing this creates a distinct legal identity for your business. It places a wall between your company's operations and your personal assets, ensuring that if the business faces a lawsuit or debt, your personal savings are insulated. To build that wall, you have to choose a structural vehicle. In Pennsylvania, the three primary options are the limited liability company, the C-Corporation, and the S-Corporation. As we can see in the structural diagram, branching out from Title 15 into an LLC, C-Corp, or S-Corp requires passing three initial checkpoints. First, you need a distinct corporate name that isn't already registered. Second, you must provide a physical Pennsylvania street address. And third, you have to pay the base state filing fee of $125. Clearing these three checkpoints in the correct order is mandatory. If you miss one, the Department of State will reject your paperwork. But by following this exact sequence, you lock in the legal protections that keep your personal finances completely separate from your commercial liabilities. For many business owners, the limited liability company is the starting point. It offers flexible management and pass-through taxation, meaning the business profits pass directly to your personal tax return. The trade-off is that the owner pays the 15.3% self-employment tax on all of that net income. This flowchart shows how that compares to a C corporation. While a C Corp is ideal for securing outside investor capital, it routes revenue through a different tax pipeline. Profits are taxed first at the entity level, which in Pennsylvania is a flat 8.99%, and then taxed again when distributed to shareholders as dividends. Regardless of which pipeline you choose, state law enforces strict naming conventions. If you form an LLC, your name must include Limited Liability Company, LLC, or Company. If you form a corporation, you must use Corporation, Incorporated, Inc., or similar corporate indicators. Looking at address requirements, Pennsylvania maintains a total prohibition on P.O. boxes. You must list a physical street address. If you operate remotely and do not have a storefront, the state provides a legal alternative. You can hire a commercial registered office provider, or CROP, to act as your official address on record. Deciding how your business will be taxed and verifying a valid physical location are non-negotiable constraints. You have to finalize both of these details before you can even begin drafting your formation paperwork.
This video contains affiliate links. I have a relationship with the brands in this video and earn a referral fee when you shop through the links in the description below. Before we dive into the exact state steps and paperwork, let's talk about your foundation. You absolutely cannot build a successful brand or protect your personal assets without a properly structured legal entity. Most people try to launch as a sole proprietor or cut corners on their initial state filings. And that is exactly why they face massive personal liabilities or get their applications rejected by the Secretary of State. Your business must be a legitimate, separate legal entity. That's where Busy comes in. Busy is the absolute best formation service out there, handling your entire LLC or corporation setup for just $0 plus state fees. They take care of all the heavy legal lifting for you, filing your official articles of organization, providing your legally required registered agent service, and setting up your ongoing compliance alerts, so you never miss a state deadline. This step is non-negotiable if you want to operate legally and protect your wealth. I've linked my full in-depth review of Busy in the description, so you can see exactly why they are my top recommendation. Make sure to use my link down below to register your business through Busy today, which will also unlock exclusive discounts and perks. Get your legal foundation handled first, and then let's get into the step.
When you are ready to officially generate an LLC, the required document is the Certificate of Organization, officially labeled as Form DSCB-15-8821. If you are creating a C corporation, the specific formation document is different. You will file the Articles of Incorporation, or Form DSCB-151306. Submitting either of those forms alone will result in an administrative rejection. As shown here, your base formation document must physically merge with the second form, the New Entity Docketing Statement, Form 15134A. Only when these two files are joined will they pass through the state's processing system. The docketing statement acts as an information router. Once inside the system, it duplicates your business data and sends simultaneous feeds to both the Pennsylvania Department of State and the Department of Revenue. This dual routing feature is the entire point of the docketing statement. Legally, your business does not exist until it is registered with both agencies. Once your base entity is active, you can apply an S-Corporation election. An S-Corp is not a standalone business structure. Instead, it operates as a secondary tax status that envelops an existing LLC or C-Corporation. This status offers financial leverage, especially for solo entrepreneurs earning more than $60,000 a year in net income. By electing S-Corp status, you can take a portion of your profits as owner distributions, which are not subject to the 15.3% federal self-employment tax. To access that tax structure, the IRS requires you to actively run payroll and pay yourself a reasonable salary for the work you do. You pay standard employment taxes on the salary, but the remaining distributions are excluded from those specific taxes. This timeline illustrates the compliance window for making this election. You must submit IRS Form 2553 within exactly 2 months and 15 days from the start of your tax year. If you miss this 75-day cutoff, your election will likely be delayed to the following year. Fortunately, Pennsylvania uses automatic S-Corp mirroring. Once the IRS approves your federal election, the state automatically recognizes it. You do not need separate state approval, and your business income passes through to be taxed at Pennsylvania's flat 3.07% personal income tax rate. This maneuver allows solo entrepreneurs to minimize federal employment taxes while maintaining their legal liability shield and state tax status. Filing your paperwork creates the entity, but you still have to establish the internal rules of the business. You do this by drafting an operating agreement for an LLC or corporate bylaws for a corporation. Next, you need to bring the business into the financial system. You do this by filing Form SS-4 with the IRS to secure a Federal Employer Identification Number, or EIN, which allows you to open a business bank account and process payroll. As we can see in this sequence, your EIN is the required identifier to complete the PA100 Enterprise registration. Submitting this registration through the MyPath system allows you to activate the specific state accounts your business requires, such as employer withholding or sales tax. If you chose to form a corporation, there is one final requirement. Pennsylvania law requires corporations to publish a formal notice of their incorporation in 2 separate local newspapers. Drafting your internal rules, obtaining an EIN, registering for tax accounts, and handling publication requirements are the actions that activate your business. Executing these triggers converts a dormant paper registration into a fully operational commercial entity. At this point, the structural sequence is complete. The entity is formed, the docketing statement is logged, your EIN is active, and your state tax accounts are open. But maintaining this structure requires ongoing work. Starting in 2025, Pennsylvania implemented a new compliance rule. Every filing entity must now submit an annual report, accompanied by a $7 fee. Make no mistake, this is a strict requirement. If you fail to file this annual report, the state holds the authority to execute an administrative dissolution, stripping away your legal standing and your liability shield. For those prioritizing speed and simple management, the LLC is the standard choice. If your income justifies the extra payroll administration, the S-Corp election offers a path to lower total tax liabilities, as long as you maintain strict adherence to state and federal regulations.